Welcome back, and it's time for another Macro Monday, where I get you ready for the week ahead in 5 minutes or less. As always, this is just a small snippet of our full Macro Monday newsletter, so if you're looking for more in-depth coverage on the week ahead, I will include a link to our full newsletter in the description of this video. Highly encourage you to check it out. Okay, let's start with our chart of the week, as always. And this is an odd Macro Monday, given that most government data releases are on hold due to the shutdown. The government shutdown and the related suspension of data releases comes at a critical point in the business cycle. Investors rely heavily on the monthly payrolls and unemployment data out on the first Friday of the month from the BLS. And we were anticipating that this past Friday, and we did not get it due to the shutdown. Without government data, our sources are independent providers such as the NFIB, the Conference Board, and the Institute for Supply Chain Management. This is happening at a time when the degree of deterioration in the labor market is highly uncertain. One thing we do know, though, is that labor markets do seem to be slowing. In the ADP figures released last week, which we're now using as a substitute, argue that this trend is still very much in place. ADP's monthly job figure is close substitute for payrolls. U.S. private employment in September clocked a large downward surprise of 32,000 jobs. This was partially due to a downward revision of 43,000 jobs. ISM employment data, however, was a bit more encouraging, with both the manufacturing and services series ticking higher from cycle lows. This is important because ISM data is often a leading indicator of employment trends. It suggests the slowdown in labor markets may soon reach a bottom. In practice, this means the bad news is largely priced in, and markets should begin to look ahead to improvements in employment. However, we're not quite there yet here at the Macro Institute. So now we must wait for both a resolution to the shutdown and the release of key data series to know where we are headed next. So, besides the fact that some of this data might not get released, it is a pretty light week in terms of data. It offers very little in the way of major economic data. Monday is quiet, and Tuesday's trade balance report from the U.S. Census Bureau likely won't be published unless we get some sort of resolution before then, and as of recording, it is not looking likely. However, the Fed is still on the clock. On Tuesday, it releases the consumer credit report. This is data worth watching, given that credit drives U.S. spending trends and tends to follow ebbs and flows in the business cycle. Earlier this year, this monthly series briefly slipped into negative territory, a signal that usually signals recession. Recent readings have stabilized, and our forecast suggests credit should continue to improve, albeit slowly in the near term. One thing to look forward to, is one way to put it, without all of the data series we're accustomed to, is that the Fed will be very active this week on the speaking circuit. Just to name a few, Vice Chairman Bowman and Governor Miron appear on Tuesday, followed by Governor Barr on Wednesday. Chairman Powell then speaks on Thursday at the Community Bank Conference in Washington. And again, normally these remarks don't draw a lot of attention, but given the fog created by the suspension of economic data, we will be listening more closely for signals on how policy will be conducted in this unusual environment. So again, we're flying a little blind here without the monthly jobs report. Normally on this Macro Monday, I'd be talking about that, but we're going to have to make do with some substitutes. If you're looking for ways to stay up to date on different data series, especially now that the government won't be posting all of theirs, you should follow us on LinkedIn, as we will be posting a lot of charts talking about different substitutes as we update charts that we normally don't have to because we rely on the government's data. So it'll be an interesting week, and that's what I'm going to leave you with. Thanks for watching. I hope you have a great week ahead. Don't forget to subscribe to the channel if you enjoyed this video, and I will see you right back here next Monday for another Macro Monday.